Bitcoin's last stand. Over the last 24 hours, we have seen significant sell volume come into the market. Some of these alts are just getting bent over the counter. It's crazy. So in this video, we are going to be talking about the support levels we're identifying and when, more importantly, we are going to switch our bias from bullish to bearish, and with that, close our riskier positions, begin to take a defensive stance in the market, and wait for the opportunities to come to us. Today is April 20th. This is going to be a quick analysis covering SPY, VIX, Dixie, all the classics, so please hit some buttons to show some support, and let's get into it. Starting with a naked chart, Bitcoin on the 4 hour, I think pretty easy to identify this trend line here, right? Just a series of higher highs and higher lows. There's this key confluence level that was being respected before it eventually broke to the upside. Set that high at 31K, and we've seen a little bit of a downtrend since then. So ultimately, this was like a bit of an ascending triangle here, right? The volatility contracted, broke to the upside, and we made that higher high. So these are higher lows, higher lows, higher highs. But now we're seeing a little bit of faltering. It's pretty, from the top to where we are now, that's almost down 8%. But some of these alts have fallen like 15, 20%, showing significant weakness. So this area that I'm looking at, between 28,000 and 28,400, that's kind of the crucial support level, because as soon as we start trending down towards here, maybe towards like 27, I think from the trend line is broken, but B, the market structure confirms this would be a lower low. So if we start trending and closing candles below 28,000, I'm out. I'm going to close all my risky positions, I'm going to move a lot into stables, and I'm going to wait for the next opportunity to come to me. Pretty clear and simple. Sticking with Bitcoin, the reason I'm watching this 28,000 level is because if we zoom out to the weekly, this was basically a swing low back in May 2022 when the fear was pretty high. So maybe we're just retesting this zone as support. I hope so, because I'm pretty risk on right now with my altcoin picks. So far, the thesis has played out really well, right? Our original idea was Bitcoin's going to swing up to 30K, Bitcoin dominance is going to peak, and then we'll see some alts. So we've seen the first half. Now we need to see the second half, but we're not going to see an alt season if Bitcoin continues to dump. Plain and simple. As much as we want to, we won't. So we really just all eyes on Bitcoin right now. If we do get a bounce up towards 29K, some of these alts are going to fly. No ifs, ands, or buts. Bitcoin dominance looks to have reached a peak at 49%. If Bitcoin continues to fall down with bearish price action, it's 9:30 in the morning and I can't speak, hello, then I do think Bitcoin dominance is going to continue to climb because these alts will lose significant value relative to Bitcoin. Looking at the SPY, going to zoom out from the 4 hour to the daily, it looks a little toppy, like 4,200 is the key level we were watching. I was really hoping we'd have the momentum to break through onto the upside, but we haven't yet, and the next FOMC is coming up quick. The next FOMC is 13 days away. It's right at the start of May, so there's the old saying, sell in May and go away. So unless SPY starts to trend above 4,200 for the next week or so, I don't think we're going to be able to set that higher high, which is bearish, because the market structure hasn't shifted. NASDAQ really faltered. NASDAQ has really faltered. We've failed to break 13,200 level. That's not necessarily like a death sentence per se, but just like the SPY, we need to see another push to the upside in the traditional markets in order to bring crypto up. The old saying is a rising tide lifts all boats. So we need to see a little bit stronger of a trend in the traditional markets if we are going to see crypto continue to thrive. The US dollar currency index, we've talked about it time and time again. It looks fundamentally weak. We've set a new low. This is the daily right here. It's testing that long-term trend line, this key level at around 102. And when we zoom in on a smaller time frame, it's almost a picture perfect retest, right? This 102 level was support over here, support, ping, ping, bouncing up, broke down, tested the lows at 100, and now 102 is acting as a resistance, ting, ting. So I'm hoping that the US dollar currency index begins to fall back down towards 100, because that would be good for risk on assets. The VIX, I did pick up some VIX calls. Shout out Palma. We've been playing the VIX. the VIX roulette, if you will. The VIX is at like a year low. It hasn't been this low. Sorry, this is just a whole bunch of zooming here. It hasn't been this low since January 2022. So over a year. Over a year, the volatility is at an all-time low. So this was my designated hedging instrument during this time. Some VIX calls, because if there is going to be volatility in the crypto market, severe volatility, it's probably going to be a function of severe volatility in the traditional market. So overall, just to reiterate, Bitcoin looking pretty sketchy right now. If we fall below 28K, I am going to close most of my risk on positions, try and sit pretty in some cash and see what happens. Bitcoin dominance will continue to rise if we see weakness in crypto. SPY needs to break that 4,200 level. NASDAQ needs to break that 13.2K level. Dixie, it would be nice if we saw the US dollar show some weakness and begin to trend towards 100. And if we see the VIX spike, we will know that we are in for some volatility. Now, great question. What are some data points that support us being bullish or bearish right now? Let's start with open interest. So open interest, great metric for trying to understand what the degens are doing. We'll start off with funding rate. So funding rate is basically the premium one pays to long or short. So right now funding rate is still green. That means there is a premium to long the asset. That means the majority of people are long. And we can hop over to the Binance website, top traders long versus short ratio positions. It shows that the top traders on a longer 1 hour time frame, I can't quite show you guys the data here, they are net long. And if we go top trader long short ratio accounts, they are grossly long. 60% are long, 40% are short. Quite an impressive difference. The other piece of data that we can use to contextualize our bullish. Like, I consider myself a bull right now, but I'm beginning to plan and position as if I was wrong. Open interest here. The one thing that's pretty interesting is we had this massive drop down from 30K into the 28s. It coincided with a very steep drop of open interest, but then open interest shot right back up. That means people took on a lot of derivative positions on this dip here, which actually gives me some hope. Because that coincided with not that steep of a price increase. And then open interest right now currently sitting at $8.6 billion. The last time we were at this price action point, let me pan over, change to the 4 hours so it's a bit more clear. The last time we were at this price point was over here. It looks like April 5th, and open interest was lower. It was sitting at basically 8 billion. Now we're sitting at 8.7 billion. So who knows? There's a lot of derivative positions in the market. That implies that the next move is going to be a big one. Personally, I'm bullish, right? The top traders are bullish. Funding rate is green. People were buying up the dip on margin, for better or worse. I guess that's what's happening. The next major event that I think is going to shake up the market is FOMC. The next FOMC is 13 days out, the 2nd of May. Coming up sooner rather than later, honestly. Right now, the statistically likely option is a 25 basis points rate hike. And if we hop on over to our economic calendar, we don't really have any big ticket items between then and now. Today we get some jobless claims. Basically meant nothing. What else is going on? We get GDP Q1 on next Thursday. We get PCE. That'll be a big data print on Friday, April 28th. So yeah, just keeping an eye on those. But ultimately, my bias is still to the upside. It's kind of the conditions that fit a melt up. The one thing that kind of tells me the top might be in is we're seeing fucking meme coins, like this Pepe project. Someone turned, I think it was $250 into over 2 million US. They said the N-word on Twitter last night and got their account banned. Maybe it was on purpose. Maybe it was an inadvertent rug pull. So this derivative project, of course there's a fucking derivative project called Fuck Pepe came up. I threw half an ETH on last night just to see what happened. I entered at 0.45. So right about there. So I am sitting in profit, but dude, absolute fucking feature of DeFi, no sell limit orders. So I was sitting on like a 3-bagger basically. I was sitting on a 3-bagger, but I was asleep getting my Z's like a good boy, and I couldn't sell. Just to be clear, there is no real fundamental news from the crypto side pushing this. Like there's no real there's no ban, there's no regulation coming. There was the hearing with Gary Genza that happened 2 days ago now, but there's no real fundamental story driving this dump in crypto. I think it's just the market reacting, trying to price some new stuff in. Who knows? But overall, crypto looking pretty sketchy. I want to see a rebound of Bitcoin. Back into the 29s would be really nice, but if we start dipping towards the 28, then I'm out. I'm selling all my risk on positions. Maybe not all. I'm selling all the positions that I've acquired more recently. Gonna retreat into cash and see what happens. That being said, show some support for this video. Drop a like, subscribe maybe, only if you want to. Thank you for watching. Oh, and you can scan this QR code for some free crypto. Thank you for watching.